Japan has helped subsidize the U.S. with low interest rates as a creditor for almost 40 years. Japan last intervened in the currency market in July of 2024, when the yen fell to a 38-year low of around 161.96 to the dollar. Then, before directly stepping into the market, authorities warned of taking decisive action, per Google. The Japanese yen carry trade has been popular for decades due to Japan's ultra-low interest rates. But recent rate hikes are causing it to unwind. While the negative carry period is ending, the broader yen carry trade, defined by borrowing in a low-yield currency to fund high-yield assets, lasted over 30 years before these recent changes. The trade's profitability is now being challenged, and some investors believe the unwind could last over a decade as capital flees, potentially impacting global markets. This is per Seeking Alpha and CNBC articles. Japan was the number one creditor for the U.S. Treasury for 34 years, putting money into the system until May of 2025, when Germany overtook it. Japan had held the top spot since 1991, when it passed China. This reversal and unwind in a need to pay back debt, is causing a huge sucking sound, like a vacuum in the global markets. This is sucking potentially trillions of dollars in liquidity out of the U.S. economy. Add to that the almost 50% of refinances for homes that are being denied to tap that equity that everyone thought they had. Almost 25% of consumer credit is being denied on auto and credit cards and so forth, credit limits being cut as well. This economy expanded for all of these decades, and it is now contracting and reversing, unwinding. Where will the liquidity come from to pay back all of this debt that still exists from all of these decades that expanded? Assets will be sold, supply and inventory will sit, discounts will be had. It's a great way for investors to buy from motivated sellers. Do you see how this is a big unwind in deleveraging in the overall economy? Learn how to sell your properties. Become a wholesaler or buy properties at the haves and wants section at the first Tuesday at MNREIA. Check out the website and the membership options. Grab the microphone on that first Tuesday at 7 p.m. and take notes for people's numbers and notes for the properties. This is a marketplace to move deals and an economy that's shifting. I think you see how the opportunity is lining up to watch those over-leveraged on properties go through a major deleveraging. I'll leave a link to a free pass if it's your first time attending. Otherwise, see you there.